Hi, welcome to Modern Wall Street's Trader Talk. If you take a look at the broader indices today, you'd think not a lot is going on, but is risk hiding in the trade? We have Matt Cheslock here to tell us what is going on. Matt, hope you had a good weekend and another one, but in the meantime, welcome to Thursday.
Yeah, it's actually a good one today. There's a lot going on, so there's enough to talk about.
Always a lot going on when I get you here. But let me tell you, bio shares, they're climbing today. What's the deal? Is there risk on appetite?
Certainly. You know, it was one of the laggards last year going into, so it had a lot of potential upside to it. And, you know, we're starting to see a little bit of a rotation out of some of the bigger tech names. They're still benefiting, but we're starting to see a rotation into the biotech names. Obviously, healthcare, all this talking that's going on in D.C. is helping as well. So right now, it's a place to put your money and there's potential growth. So that's why we're seeing such huge upside to it.
Absolutely. And talk about some upside, or should I say downside, is crude. I mean, this could be a major play for traders. It entered bear market territory this week. What are your thoughts?
Well, just as biotech was so awful at the end of last year, crude is awful right now. So you're seeing the rotation out of oil, but eventually you're going to start to see that idea that this is where there's most return possible. So eventually, as a contrarian, you're going to want to start thinking about, where do I have my entry points? We broke down through support levels at 43 and change that we saw back in March. We blew through those. Today we're starting to see a little bit of a rebound today on the natural gas inventory number. But right now it's not ready to be bought, but you're going to want to be early. You're not going to want to be late and paying 45.50 when you can be paying 40 near term.
Right, and even though the EIA showed some positive news, oil still is very volatile. What does it say about OPEC's role in the oil patch?
Well, I mean, OPEC right now is really under pressure. They were for so long fighting for market share. They gave that up when they went to their production cuts. Now they're going to be fighting for market share again, and now they're going to have Libya at full strength, Iran at full strength, Qatar at full strength, where these countries are looking to produce as much as they can to make up for lost time. And then you have U.S. on top of it, and we're producing, and found that we can produce at a lot lower cost. Their CapEx is in for the year, so they can afford to take a little bit of a hit for market share. So, oil's going to be under pressure for a little bit, and OPEC is under a lot of pressure now to produce.
Wow, well, I don't know about OPEC, but one commander-in-chief in the market space is definitely Amazon, as it literally gobbled up Whole Foods last week, a specialty food store, and now looking at a partnership with Nike. I mean, what does it say about the discretionary space? What are they seeing here?
Well, Amazon was a tech stock for so long. It's no longer that. Amazon is everywhere. You saw Alibaba yesterday. They're kind of trying to go the same model. It seems like they want to dominate, that retail space, that online presence. And the further you get away from just online, when you start to see, Whole Foods and Nike and these big companies now are merging or joining with Amazon, it shows their force, their presence. And everyone keeps waiting for the other shoe to drop with Amazon to see it roll over and give back some of the gains. It certainly doesn't look like it. They've made every right step in the past year.
For sure. So are you looking to trade Amazon or companies that it's eyeing?
It's hard to say, because when Amazon does a deal, the other stocks aren't benefiting from it. They're actually suffering. Target's down, aggressively. Costco, these were all sold off because Amazon has become the behemoth in the industry. So I think you want to buy probably Amazon in any pullback. It's hard to buy it at this level if you've missed it over the last year from 400 to 1,000. It's very hard to get in, but the long-term prospects are still pretty good.
All right, well, I can't let you go without asking about the rebalance tomorrow. We have the Russell. What are your expectations for this one? I'm expecting volume. What's the scoop?
They're talking about the largest equity trading day in history tomorrow. It's going to be that kind of size. We're going to see some volatility. The markets have been fairly quiet going into it, and I wouldn't expect that to last tomorrow. So put your helmets on, as Sarge likes to say, and foil up and, get ready to trade this. This is a big liquidity trade, so you're going to see a lot of portfolio managers being able to position stuff for the summer. So maybe they can get out of something that they're not quite comfortable with, because tomorrow's going to be the day where they're going to have ample opportunity to do it.
Absolutely. That was a good shout out to our friend Sarge. Helmets on. Well, Matt, thank you so much for giving us the wherewithal, and hope you have a nice weekend. See you next week.
Yeah, you too. Look forward to it.
This is the Vaz on location reporting live from the New York Stock Exchange.